Hey everyone, this is Dan. Let's talk about Bitcoin and my strategies for Bitcoin. First of all, I'd like to tell you that I have more than 20 years of very successful investment experience, but I have not been buying Bitcoin. With all the buzz about Bitcoin in the last couple of years, I have decided to look into it. I applied some of my analytical tools and came to the following conclusion. I'm not buying Bitcoin today, just yet, but in the next few days, under the right conditions, I will buy Bitcoin with my Robinhood account. In the last few days, Bitcoin has dropped more than 9% from its peak. Is it time to buy on a dip? What if Bitcoin has hit a blow-off top a few days ago and will be losing even more and end up losing maybe 30 or 50% before it recovers? If you have been using the buy and hold strategy since 5-6 years ago, your confidence has certainly paid off and your investment has grown more than 800%. Congratulations. In the meanwhile, in 2017 through 2018, you would have experienced an 80% drop in your holding. Then again, in 2019 and early 2020, there was a 42% drop before the price recovered. What if Bitcoin is finally losing its magic? Are you going to lose everything you have invested so far? Is there a better way to invest in Bitcoin so that you can pocket all the gains and not have to suffer from the periodic losses? To answer these questions, I developed a computer model. I back-tested my model with Bitcoin data from September 2014 to now. The computer model ran through tens of thousands of scenarios to optimize a few parameters so that I can maximize the gain and minimize the risks. You might say, what the heck are you talking about? Who in his right mind would do something so crazy? Well, I happen to have a master's degree in engineering. I minored in mathematics when I was in graduate school, and I later on picked up an MBA to understand why people were making so much money on Wall Street. Building computer models happens to be one of my hobbies. If you feel like throwing up at this point, please stop this video and do something else, and I wish you all the best in the world. If you are curious about what I'm about to tell you, hang in there and get ready to see a lot of numbers and charts. To give you a sneak peek of what my computer model does, let's look at the baseline. From September 2014 to today, if you use the buy and hold strategy, your average annual return would have been 275%, which is very impressive. But you would have also experienced two bad years. They were 2014 and 2018, in which you would have lost 104% and 73% on an annualized basis. I add up the losses from the two bad years and call it the total bad year loss, which was 177%. The objectives of my computer model is to maximize the average annual gain and minimize the total bad year loss. After crunching through tens of thousands of scenarios to optimize the parameters, the computer arrived at a final solution that generated an average annual return of 390% and a total bad year loss of zero, nada. The solution would have required me to execute an average of about 6 trades a month. I need to caution you that hindsight is always 20/20. As I apply the recommendations from the model going forward, I don't expect the results to be this good, but I do expect to outperform the buy and hold strategy, especially in terms of lowering my risks. The main reason is that my computer model knows when to sell. That means if Bitcoin is going to collapse in the near future, my computer model will tell me to sell before I get into real trouble. The flip side is that if Bitcoin is going to pick up and go up quickly again, the computer model will tell me to buy, so I don't lose profit opportunities. Let's get into more details. Before we move on, if you like what you've seen so far, I will very much appreciate if you can click the like, subscribe, and notification button, and you will be notified automatically by YouTube when I post a new video in the future. I will also welcome any comments or questions you might have. Let's continue. I use two indicators as the foundation of my model. The first one is a fast stochastic indicator. You probably know that the stochastic indicator is very good when the price of an asset is going up and down but is generally going sideways. The stochastic indicator does not work too well when the stock is going up steadily or going down steadily. To take care of the times when the price is going up fairly steadily or going down fairly steadily, I use a hybrid form of moving average crossover indicator. With this indicator, my computer model will buy when the daily closing price is above a certain moving average. The model will sell when the daily closing price falls below a certain moving average. To optimize the return of my model, I found that it is not enough to use just one moving average. I have to use 3 different moving averages for the short term, for the midterm, and for the long term. The parameters that I have in my computer model are the following. A, the period for the short-term exponential moving average. B, the period for the midterm exponential moving average. C, the period for the long-term moving average. D, the upper limit for the stochastic indicator. In other words, if the indicator drops below this limit, sell. And E, the lower limit for the stochastic indicator. In other words, if the indicator rises above this limit, buy. Instead of trying to eyeball the chart to decide whether the price is trending up, down, or sideways, I want a computer model to decide objectively based on mathematics. If the short-term moving average is above the midterm moving average and is above the long-term moving average, like this, the price is trending upward. On the other hand, if the short-term moving average is below the midterm moving average, which is below the long-term average, the price, by definition, is trending down. Any other condition, such as the short-term moving average being sandwiched between the mid and the long term, the price is considered to be moving sideways. There are more details in the model. Depending on the values of the price in relation to the moving averages and the level of the stochastic indicator, I defined 81 different states. Each state triggers a buy, sell, or do nothing recommendation from the computer model. After I've run my model, this is what I got. My investment would have grown like the green line in the chart here. The blue line is the daily closing price of Bitcoin. The portfolio would have grown from the initial investment of $10,000 in 2014 to more than $5 million today. I know hindsight is always 20/20. I therefore expect the actual performance of a model to be not as good as the backtests. I'm still comfortable with my model because it will actually tell me when to sell before any crashes get a lot worse. It will also tell me to buy when there's sufficient upward momentum so I don't miss out on the profit opportunities. If you look at year by year for the last 6 years, this is how the price of Bitcoin developed. And this is how my portfolio would have grown. And these are the trades recommended by the computer model since December 1st of 2020. So what does all that have to do with making a profit tomorrow? At the end of January 15, 2021, that's a couple days ago, the computer model issued a sell signal. That's why I'm not buying just yet. Today, I don't own any Bitcoin. I do have a Robinhood account, which allows me to trade Bitcoin. I will wait for a few days until the model issues a buy signal. I will then buy some Bitcoin to take my computer test drive into a real road trip. If you are interested to find out what happens next, stay tuned for my next video. To put everything into a more familiar context, let's look at the Bitcoin price chart for the last few weeks with the MACD indicator. As you can see, MACD flashed a sell signal on January 13, 2 days before my model issued a sell signal. Sometimes my model agrees with the MACD and other popular indicators, sometimes it doesn't. I don't want to brag about it, but my experience with other assets tells me that my model generally performs better than any one single indicator. If I execute a trade on Bitcoin before I post my next video, I will post an update below this video like that. You can save this YouTube page so that you can check on my update notes occasionally. If you are interested, please click on the like, subscribe, and notification buttons so that you'll be notified when I post a new video. Thank you so much for watching all the way to here. I'd like to mention that I'm not a financial advisor. I show my trading strategies for educational and entertainment purposes only. You should formulate your own ideas on buying or selling financial assets, and should probably consult with your financial advisors before you do so. This wraps up my video for now. If you have a few seconds, hang in there. I'd like to share with you some additional reference information. In the meanwhile, I'd like to wish you the best of luck with your financial investments. If you wonder when the market is going to crash again, check out a video on this topic in my playlist. The following is a list of the analytical tools I use and the information I look at every day to develop my investment strategies. After doing hours of research, I summarize my findings into a few minutes of video for you. Links are provided below this video for you to learn more about RSI, Bollinger Bands, the role of the Federal Reserve Bank, etc.